Hey everyone, welcome back to Prairie Real Estate, where I educate you all about Canadian real estate. My name is Matthew Pfeiffer. I'm a real estate agent from Regina, Saskatchewan. And today I want to talk about what a real estate market crash in Canada would look like. Yeah, a realtor. I'm going to talk about market crash. Of course, realtors would never tell you prices are going to go down, would they? Well, yeah, they can, and they do. How do I know what the heck I'm talking about? Well, I work in a market that saw prices decline by 25%, and in some areas, 70%. Yeah, not an increase, a decrease of 70% for house prices in certain areas of Regina. So I want to walk you through what happened, and so you know what to look for when potentially a real estate market is about to crash. But before we get into talking about real estate market crashes, let's start off with another terrible joke. The other day I had to get a biopsy and I asked the anesthesiologist, hey, can I administer my own anesthetic? He said, sure, knock yourself out. If you have a terrible joke that I can use in a future episode, put it in the comments below. And if you really like this video, give me a like and subscribe if you haven't already. So how do I know anything about a real estate market crash? Well, because I spent most of my career working in a market where prices decline. I got my license in 2012, and right then was when prices in Regina and Saskatchewan as a whole pretty much peaked out. Great timing, hey? So instead of spending my time telling people how much money they're gonna make when they sell their house, I had to tell people how much money they were going to lose when they sold their house. And helping buyers, I had to make sure I protected them as much as possible, finding them a great house and getting them the best deal I could, knowing the prices were declining. From 2012 through 2019, we saw prices in Regina decline about 25% as the citywide average, but there were neighborhoods that saw a 70% decline while others only saw a 10% decline. So I'm going to show you a couple of charts here to explain what was going on. Just some quick context, this is the citywide average, kind of looking through time. You can see from 2006 through 2008, prices shot through the roof. They went up 81% in a little over 2 years. Then we had the 2008 recession, prices dropped a little bit, then continued to rise all the way through 2012, where they peaked out at about $300,000. Then they bottomed out in 2019 at $232,000. Now that 25%, that's citywide. Let's look at a neighborhood. It's called Washington Park, and it's a high crime neighborhood, less desirable. And there's where we saw prices decline by 70%. Let's pull up that chart again. Now this graph has a lot more volatility than the citywide one does because there's just simply fewer houses, less data points. You're going to see it bounce around a little bit more. But as you can see, prices there actually peaked in 2016 at $161,000. By 2020, they were down to $78,000. That's a 70% drop in prices in about 4 years. Okay, but Washington Park is a high crime, less desirable neighborhood in Regina. What about an ultra desirable neighborhood? What happened there? Let's look at Wascana, one of the more premier subdivisions in all of Regina. As you can see here, prices peaked out in about 2013 at $588,000, and then they bottomed out in 2018 at $504,000. That's a little over a 15% drop in prices. Okay, what's the moral of the story here then? Well, the lesson to take away is that if you bought a house in Washington Park, you saw a significantly bigger impact on how much that house went down in value versus somebody that bought a house in Wascana. Those that purchase houses in good neighborhoods with good qualities see less of an impact than the higher crime, less desirable neighborhoods. So if you're thinking about buying a house and you're worried about declining prices, find a good house in a good neighborhood and you'll be impacted far less. A real estate market doesn't just crash completely out of the blue. What goes up must come down doesn't apply. Real estate does not follow the laws of gravity. There's going to be significant factors that play into seeing prices decline. The economy of Saskatchewan is based on exporting commodities. We produce what the rest of the world consumes. If you had mustard with your sandwich recently, it probably came from Saskatchewan. 50% of the world's mustard supply comes from Saskatchewan. If you like lentils, 95% of Canada's lentils come right out of Saskatchewan. Long story short, Saskatchewan produces energy, food, and fertilizer that the rest of the world consumes, and generally, when one of those industries is seeing a downtime, another industry will be seeing a boom time. But in this case, we saw consecutively all of those economies take a significant hit, causing the province to enter a recession. Government spending dropped, as did hiring and population growth. But just prior to this, the province had gone through a very significant economic boom. We saw the population of the province go up 20% in a couple of years. House prices in Regina went up 80% in about 2.5 years. It seemed anybody with a hammer was all of a sudden a home builder, and we had foreign buyers. Except they came from Ontario and Alberta and British Columbia. Yeah, you guys were the foreign buyers in Saskatchewan, buying properties left, right, and center. Why am I telling you about how much mustard comes from Saskatchewan and what does that have to do with a real estate market crash? What I'm trying to say is that real estate markets don't crash overnight, and they don't just flip because of one single factor. We saw significant economic hardship here in Saskatchewan. We saw stagnating population growth, and a lot of people lost their jobs. We had a ton of houses on the market at one point, over 12 months worth of inventory, not like where you see 2 weeks of inventory in Toronto. So there was a lot of downward pressure because buyers had so much choice. And it wasn't just a taxation policy. You couldn't just ban foreign buyers and change the market. It wasn't because interest rates went up or down. They did both during this time frame. It took a significant amount of economic hardship and a multitude of factors to cause the market to turn down. Our market crash was caused by simple economics and the laws of supply and demand. We saw the economy slow down, thus population actually basically stalled, and there was an oversupply of houses, creating downward pressure from buyers because they had so much choice. They didn't have to pay a higher price that the seller was asking. Somebody else was willing to take less money. Even with all the negativity in the economy, that giant slowdown in population growth and the oversupply of houses, the city saw an average of a 25% decline. Of course, there were neighborhoods that got impacted far more significantly. But if you're hoping that you see a real estate market crash and prices go down by 50% or some ridiculous number like that, it's unlikely to happen, and it's not going to happen overnight. It took 8 years for us to see that 25% decline. And along with that decline was significant economic hardship. So if you're hoping or even maybe praying, wishing for a real estate market crash so that you can finally buy a house, you better also be anticipating significant economic hardship to go along with it. There is a real world example of a Canadian real estate market crashing. It does happen. Trust me, I know, I lived through it. What lessons can you take away, and what do you need to look for to avoid a situation like we had? Let's get to that now. Now that is what happened in my market, where we saw a fairly significant correction, 25% citywide and 70% in some areas. That is a very significant correction. But what do you need to know to avoid that? What signs do you need to see or look out for to avoid a real estate market crash? Well, a couple of things to note first, and that is that the conditions that are needed to create the downward pressure on prices, like we saw in my market, it takes years to develop. Prices don't just flip overnight. That 70% in decline in prices, that took 8 years to see that kind of price decline. It didn't happen overnight. So these things are going to take some time. You can't just say, oh, well, in 30 days, prices are going to be way different. It's not how it works. So what are some signs or things that you need to look out for to help you kind of get an idea when potentially a market might crash? Well, look at the general state of the economy. If your market is seeing a strong economy, it's unlikely that prices will decline. Then look at population. Are you in a market that's seeing tremendous population growth? I'm talking about you, Toronto, right now. I believe that is the fastest growing metropolitan area in North America right now. If you're in that type of environment, there's a lot of people moving there that are going to need to either buy or rent a house, strong demand for housing. You're probably not going to see prices drop with that kind of environment. Then when you're watching the market, and I talk about this in my market update, look at the supply and demand balance. We in the industry will call this months of supply. Basically, it's how many houses sold versus how many houses are on the market. If you have less than 3 months of inventory, that is going to be a seller's market. Prices are likely to increase or are already increasing. A balanced market is about 4 to 6 months worth of inventory, so prices are probably going to maintain where they're at. And then a buyer's market is going to be 6+ months of inventory. That's going to put downward pressure on prices. My market, we had over a year's worth of inventory at one point. That's why we saw such significant downward pressure on prices. That shift from sellers to balance to buyer's market, that takes a long time for that to happen. It doesn't happen overnight. especially right now, say in Toronto, where you've got about 2 weeks worth of inventory. It's going to take months, if not years, of increasing supply before they get to a balanced or even a seller's market, or sorry, a buyer's market, and seeing downward pressure on prices. This takes a long time to shift. It doesn't happen overnight. And if all of this has got you wondering what's going on in the Canadian real estate market right now, right here, my most recent Canadian real estate market update covering 11 major markets in Canada, get you up to speed on what's going on there. This is what the YouTube algorithm says you need to watch next on Prairie Real Estate. As always, guys, thanks very much for watching.